What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about one stock that is going to be reporting earnings next week. Got a lot of potential in the cybersecurity space. And of course, it's going to be none other than CrowdStrike. And I do think that they are going to have a very similar impact in the market that Palo Alto Networks did when they reported earnings, and they obviously rallied over 10 to 15%. So hope you guys enjoy this video. We're going to break down everything you need to know about CrowdStrike prior to the numbers coming out. We're going to go over the earnings expectations, revenue. We're going to go over the cash flows, the balance sheet, the intrinsic value. Everything is going to be calculated in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining. And of course, being part of our MoneyVest community, there is going to be a 16% annual discount available till the end of this month. You get access to all the alerts, all the members-only private videos, intrinsic values, and all the other benefits as well. So 4 or 5 more days left for that 16% annual discount. Link's going to be down below. So this right here is going to be their numbers. Now, CrowdStrike is one of the best cybersecurity companies out there, next to Fortinet and Palo Alto Networks, in my opinion, because they are not profitable. And that's exactly why I believe CrowdStrike's got a lot of potential, because if and when they actually turn profitable, guess what? There's going to be a lot of institutional involvement. I'm going to be super interested in buying CrowdStrike as well. So $724 million is going to be that revenue revenue expectations. EPS on a GAAP basis is only going to be a loss of 6 cents per share. And on a non-GAAP basis, it's going to be 56 cents per share. So we are still expected to generate a loss on a GAAP basis, but non-GAAP, half a dollar per share is going to be that number. 25 upgrades in the last 90 days, only 3 downgrades for EPS in the last 90 days as well. So expectations are pretty high going into these numbers here. So $52 million, growing that to over $2.2 billion. That's a very, very strong and substantial growth rate. Gross profit has gone from $18.7 million to $1.6 billion, so almost 100x growth. And operating income also has been generating an operating loss every single year, expanding down to operating loss of $190 million last year. Net losses have also expanded to $183 million. Again, these are on GAAP basis. And shares outstanding have also ballooned from just under 40 million to over 233 million shares outstanding. And of course, EBITDA is also negative across the board in the last 6 to 7 years, with revenue per share growing, but diluted earnings per share also negative for the company. Now, when it comes to margins, very strong margins, 73-74% gross margins, but everything else is pretty bad. We've got negative net income margins, negative EBITDA margins, of course. Free cash flow margins still pretty good, 33%, but return on equity, return on capital, return on assets are all negative because net income is not there. It's a net loss. And of course, we do have net income per employee. Net loss is down to $20,000. Now, one thing I will point out is that has actually gotten better than $53,000 loss per employee. That's gone down to $20,000. So again, that just goes to show that, okay, they're moving in the right direction. They are minimizing that loss per employee, and eventually they can turn the corner towards profitability. That's very, very important to me. Very important for, I would say, most institutional investors. Balance sheet is fantastic. So total cash sitting at just under $3 billion for the company, with the revenue, with the cash, with the debt sitting at just under $800 million. So that is a net debt, negative net debt of just over $2.1 billion. That's exactly what we look for. Current ratio is over 1, quick ratio is over 1, and debt to free cash flow is a little bit higher. We look for this number under 3, but it's just over 4.3. So again, something to keep in mind. And this right here is going to be for their current fiscal year 24. EPS expectations of $2.39, which is going to be a growth rate of 55%. And that number is expected to grow to almost $17 by 2033. So over the next 9 years. And the P multiple right now on a forward basis is sitting at over 62.5. So I don't know about you, but that's a definitely very, very high price earnings multiple for CrowdStrike. And of course, we are trading at over 61 times price earnings multiple on a GAAP basis. Actually, on a non-GAAP trailing basis, over 80. Price to sales trading at a little bit over 11, almost 14. And of course, price to cash flow trading at over 33 times cash flow at the moment as well. So definitely trading at very, very expensive valuations nonetheless. So going over to our spreadsheet here, if you plug in some of those numbers, we've got a growth rate of 32% over the next 5 years. That's a pretty strong growth rate. And of course, share dilution is also very high at 34.4% every single year over the last 5 years for the company. So what we're going to do is actually over the last 6 years for the company. So if we basically take a look at what the share count was in, let's say 2020, 148 million. If you plug that number in, 148.1 in 2020, now we've got a share dilution of about 16.5%. over the last 6 years, over the last 3 years for the company, right? So it's actually much better than 34. So more recently, you notice as the numbers are starting to get bigger and bigger, they're not diluting shareholders as much. So what I'm going to do is I'm going to go with a 10% share dilution, which might still seem pretty high, but that's what we're going to go with because the recent trends are not looking great for CrowdStrike in terms of share dilution. I'm going to go with about a 30% growth rate for net income over the next 5 years. We're going to go with a 30 times PE multiple. Remember, it is a significant step down from 60, 61, so fair value will be lower. We have to be prepared for that. 12% discount rate, 10% margin of safety brings our fair value down to $84 per share. Right now, it's trading at, man, I was going to say 13,000. That's crazy. 149 right now. So 149 is going to be that number. And I know previously I think, analyzed CrowdStrike from a different lens. And the fair value is in the low 100s. And that's probably because we didn't account for a lot of share dilution. So if I do 5% here, you'll notice the fair value jumps to over $106. And I'm pretty sure that I've analyzed CrowdStrike before with a low 100 fair value. Like, I know there's going to be comments that, Caddy, you analyzed this CrowdStrike before with low $100, and that does ring a bell. And that's probably because I did not account for a lot of share dilution, because more recently, though, they have been issuing a lot of shares, 5, 10, 15, 20% per year. That's actually a significant amount. So if I just simply go from 5 to 10%, the fair value drops down from $106 down to $84. So that's something to keep in mind. Of course, if they don't issue a lot of shares in the future, that's a cherry on top, but we still have to account for our conservative bear case analysis. If it ends up working out, fantastic, I'm happy, but if it doesn't, that's exactly why we're doing this analysis. So $84, and this right here is going to be that sensitivity grid, and right now, since it is trading at about 150, we are pretty much trading at around 38% growth expectations with a 40 times P multiple over the longer term right now for CrowdStrike. And this right here is going to be the entire sort of technical analysis. I remember taking a trade on CrowdStrike in January. So at the beginning of this year, I remember doing a swing trade on this company. We made a nice 15, 20%. But of course, hindsight 2020, had we held on to that position, it would have been up like a little bit over 58, close to 60%. So going into these earnings, we've got a lot of consolidation sideways. So what you'll notice is that this old resistance is acting as a very nice new support. And we've got a previous resistance acting as a resistance at 167. So what's CrowdStrike doing right now is basically trading sideways in that range. And that's what it's really trading in that right now, in that range. So if you do end up breaking down below 140, for example, if you do see earnings not come in with on par with expectations, next support is going to be down to this level at closer to $114, $108 per share. So that's going to be that next level to watch for CrowdStrike. And of course, a resistance up to 167. So this right here is going to be that next resistance, and that level to watch at 167. Support level is going to stay put at $140 per share. So right now we're right in the middle of that range. So either way, I will be ready to potentially take advantage of this stock if it ends up selling off and maybe comes down to closer to our intrinsic value. Maybe not anytime soon, because even the last time when we took the trade, it was at closer to $90, $92. But even low 100s is something that I'm willing to pass as in I'm willing to kind of let it slide, and of course take a position at it in the low 100s, because share dilution is really the moving piece for CrowdStrike's valuation, right? So if they don't issue a lot of shares, and do, let's say, 5%, then the fair value jumps up to $106, and now we only need less than 30% potential downside for this company to be trading at its fair value. So I hope you guys enjoyed this video and a complete update on CrowdStrike. Let me know your thoughts down in the comment section below. What do you think about this company? Are you buying, selling, or holding? What are your thoughts? As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below with that 16% annual discount available till the end of this month. As always, happy investing, and I'll see you all in the next video.